Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week that, as of today, December 21st, 2024, 1 week towards the end of the year, things are looking quite volatile with a definite negative sentiment across the board. We are seeing again a mixed bag of economic data, which is making it really tough to get a clear picture of where we are headed. On the one hand, some US economic indicators are showing some resilience. We had a positive surprise on retail sales month over month, 0.7 more than expected, and beating the forecast of 0.6 and the previous 0.5 increase. This is suggesting that the consumer spending remains strong. Additionally, there's some technical indication that markets could be oversold, and thankfully, a temporary funding deal seems to be in progress, which does at least reduce the immediate risk of government shutdown in the US. However, there are substantial headwinds that point everything towards inflation remaining a major concern. Mixed data creating uncertainty about this inflation. For example, we had this week the core PCE on Friday. Look at this. We had lower than expected personal income and personal spending and core PCE month over month. However, a key inflation measure came in at 0.1, a negative surprise that indicates a slower disinflation than anticipated. We did see some positive movement in the PCE price index, dropping to 2.4% year over year, but that was offset by the University of Michigan's inflation expectations reading, which basically points towards 74th as expected, increasing the 71.8 that was previous one, and remains really elevated for both the 1 and the 5-year forecast at 2.8% and 3% respectively. So all this is a major concern, but however, we had on Friday a really pushback up. The bulls took control, and we are going to see that on the flows and on the market internals. But adding to this mix is the Federal Reserve's outlook. This has tempered market expectations because recent comments from Jerome Powell and other Fed officials indicate a cautious approach, emphasizing the need for a restrictive monetary policy despite acknowledging progress on inflation. In particular, the Fed's projection now suggests a slower pace of rate cuts. We can see this on the probabilities on the FOMC tool. This is quite impressive because we are right now at 425, and anyone's betting on a rate cut on January 2025. And look at this. Look at this. One rate cut in the entire 2025. So basically, the Fed's projection now suggests a really slow pace of rate cuts because the economy is really strong. Their median rate forecast is now higher than previously expected, with 3.8 next year, 3.3 in the following 2 years, and 3% in the long run rate. And you know what this means. This is way higher than the 2% neutral rate. And basically, this is less than what the market had been hoping for. Some members like Hamad dissented, indicating a close call regarding the cuts and supporting the idea of holding the policy steady because of higher inflation risks. But basically, this is in between 25 and 50 basis point rate cuts in 2025 and maybe 50 basis points in 2026. But this is not what this is reflecting. The market and the analysts are really scared of 2025, betting on only one rate cut, maybe. So looking at the broad picture, we can see the NQ. This is the weekly chart. We can see that, excuse me, the US economy retail sales are showing strength. In other areas like industrial production was contracted by 0.1%, capacity utilization at 76% is underutilized capacity. current account deficit is sizable, really large deficit, and these indicators combined are not giving investors a lot of reasons to really cheer about. And there's no consensus on the Feds. So we are seeing again a mixed message with Fed officials noting that rates will likely come down eventually, but not as quickly as everyone was expecting. So it's a really difficult landscape right now, but there's clearly increased uncertainty that we need to navigate. Basically, the US market is really complex right now towards the end of the year, but we are seeing some, as I was mentioning, we are seeing some internals that are really encouraging. On the left-hand side, we are seeing the SPI volume. Look at this spike. And also on the advanced decliners, look at this push on Friday. We had the rest of the week a really flat week because of the bad news, but also the Nasdaq the Qs are expecting a huge increase in volume and a huge increase in advanced decliners. So what is happening here? It's sneaky people buying the dip. We can see the weekly chart that got a nice week here, and on the daily we got the big pull on Wednesday, the pullback on Wednesday. 3.64% is one of the biggest pullbacks of the year. But on Friday, look at this. Look at this. On the 1 hour, for example, we got the big buyers coming in. Where? So basically, at some of these volumes, at 21,000, we got the buyers. So we are here right now breaking this pivot, but we are below that. So what I'm expecting, it's basically, let me tell you, I'm expecting this 1 hour fair value gap to hold, to hold the price action. This 1 hour fair value gap is quite interesting. Then we have this pivot right here that we need to establish. We have the all-time highs right here, and we need to reclaim 21,638. That was a previous key level of, on the daily, of this pivot on the previous all-time high that we broke. So on the 1 hour, we need to support this. That would be a nice thing to buy. I will be waiting for that next week. And the target, we are going to see quite a difficult time on this inverse fair value gap that we need to be really careful about, because then we have this other pivot, and then this section right here on the 15-minute chart has a lot of things to be concerned about. The first 15-minute inverse fair value gap would be this. And then we have another one up here, but this one I don't think is going to hold, because we are going to enter the 22,000, and that would basically provide us with a little bit of push. But what I will be watching next week is the point of control was here. We need to hold this, and then this 1 hour fair value gap. I will be watching to buy some area around 21,400, around that. Be ready to see how we trade around this pivot, break the pivot that on Friday we established, and then push towards this area of 22,000. 22,000 is going to be key, because we have a 15-minute inverse fair value gap, and it's super difficult to trade that psychological level. We need to see some kind of manipulation to the downside, and then the big push higher. And I will be ready to buy the second retest of the 22,000 towards 22,300. And if we are going in the middle of the week towards Christmas in this area of 22,200, if we hold that, make sure that I will be betting for 22,500 and towards that for the end of the year. But we have to really be careful. Everything starts with this 1 hour fair value gap holding. We had a nice day on the banks. We had a nice day on Friday also on the semis. But how is the RSP holding? I mentioned that maybe we are a little bit undervalued. We are a little bit oversold because look at this drop on the RSP. This is the equal weighted. We have a lot of pushback on every single internal DMA. And when we have these readings, I think there are some investors, some big pockets that are for sure buying this dip. So this is my forecast. This is what I will be watching. I'm pretty transparent with you. This is going to be really tough, but we have the market rally maybe holding a little bit, and we have to really be really careful. So that's all from my side. As always, thank you for your time. If you found these weekly recaps useful, please give it a like, subscribe to the channel, because I upload videos like this one every single Saturday. And then from Monday through Friday, I upload daily videos for market forecasts, market updates, and market recaps. Stay tuned for more, but right now we need to disconnect a bit. We need to be with our family and friends. We need to rest, but for sure, do your homework, do your own analysis, and let's be prepared for next week, because that is going to be really, really interesting. So remember discipline, patience, and risk management. Have a nice weekend and see you on Monday.